Active duty cases can be really cheap, and because of that, it can look like a very attractive option to invest for the long term because of how good the ROI is on cheap items. So today I'm going to go over the returns of every single case over the past year to see if it's actually worth it. Just a word from this video sponsor. CSGO Empire offers a 0% buy or sell fee with a full peer-to-peer market system, meaning if you're worried about community bans, it is not mandatory to put your API key in, so there'd be no way that Valve knows where you're trading. This market has high liquidity and an auction system where once you list your item, anyone can bid over that price for the next 3 minutes if they wanted the skin. If it doesn't sell within those 3 minutes, then it gets listed onto the market for that price. This allows you to snipe some deals as low as 95% above, and once you sell your skins for coins, there is no wager requirement to withdraw. Thank you to CSGO Empire for sponsoring this video. Now, starting off, I think it's important to understand how the active duty price cycle normally goes. When it first gets released, it's a lot of new skins that normally look good, so people want to buy them. The price goes up very high, and because it's so new, there's not a lot of volume, meaning it can normally maintain a relative high price point. But over the next year, it'll slowly decline as a lot more volume enters the market and people lose interest at the same time. And I call this skins finding their price point. It's just more volume is coming in and it's finding where it sits in the market. And so with this in mind, we can easily rule out the most recent cases, that being Revolution, Recoil, and kind of Dreams and Nightmares. So then we can look at the older active duty cases because they've already found their price point in the market. And that's Snakebite and Fracture. And we'll see that Fracture actually has a staggering 253% return over the past year, which actually beats out some of the rare drop pool cases. But why is this? Well, the best explanation is that both Snakebite and Fracture are old cases, and so between the time span of 2021 when they got released and a year ago when this graph started recording it, not only were the prices a lot cheaper than they are now, it had plenty of time to settle into the market with a ton of volume, meaning once we saw the insane growth that we now know of as the CS2 announcement, it grew accordingly, as its days of being overpriced because it was new were over. But why did the Fracture grow so much over Snakebite? Oh, it's simply because Snakebite doesn't have good skins. If you take a quick look at the unboxing rates, you see that the Snakebite is the cheapest case on the market while also having the lowest demand of any of the active duty cases. And so then the question is, should you invest into either of these? Well, with what I just said about the Snakebite, the demand is not high enough to justify putting money into it in my mind. And with Fracture, it's already seen its run up in price, and because it's active duty, it's difficult to imagine it growing anymore. And so then the only way that I'd ever see either of them being a profitable investment is if one of them got removed from the active duty drop pool. And from a business perspective, it's more likely they remove Snakebite having lower demand. So in my mind, it's not worth the risk. But if it is to you, more power to you. So then that covers all the active duty cases. And the reason why I'm so cautious with putting my money into active duty cases is because although these numbers are good, if you look down on the graph, you'll see that almost all the cheap rare cases blow it out of the water, with the only exception being Prisma 2. And so in my mind, you're spending a little bit more money, but you're getting better ROI and a much safer option because it's not as dependent on game updates, because the rare cases literally never get touched by Valve. Not saying it won't happen, but it's most likely that it won't. You can even look at older cases which have really low risk because their supply is already low, meaning they get less affected by operations, Steam sales and whatnot, and they still match the returns of active duty cases at the minimum. Some of them do stupid well for some reason, like the Revolver case. If you take a look at the Fracture case graph, you'll see that it stayed stagnant for long periods of time. And if you look at rare drop pool cases like the Danger Zone, it grows in that meantime because the supply is still dwindling. And so that means even in a red market, you can profit off of rare drop pool cases where you normally don't see that from active duty because the supply is still growing. Yes, the active duty have a really low starting price point, but the issue is in the numbers. They do not grow as fast as the other cases. But yeah, I still see people invest in active duty, so I thought this video might be helpful, even if it has been quite profitable for some. There's going to be better options with less risk. If this was helpful, I'd appreciate a subscription just so I know to make more of this kind of content. That's all. Bye-bye.